It's been a while, but that's no fault of mine. Well, I suppose it is, really. I've been busy doing many other things, really. You know, I still have to work as well as trade, unfortunately, but the plan is growing, and that's the main thing. I am trading to a plan, so who knows, in 6 months I'll be able to completely finish work. Maybe even 3. If I can be right on target, I think it's 12 weeks left of work. But we'll see how we go, because trading, as you know, can be a bitch a bitch to manage. But aside from that, I've been just looking around, you know, as you do. Everybody's always looking for the optimum system or just new ideas, really. It's still interesting to me, trading is. I know some people are bored of it, but I still find it really interesting. And I always look at other people's strategies. And along with that, I was actually, the idea of this video today was to talk about indicators, what I do and don't use. And I came across, by chance, I just came across a strategy that does use indicators, and it's a 5-minute scalping strategy. Now, in the description of this video, you will see a link to this video where I found the idea. And if you watch his video, then you'll see what it's all about. But in brief summary, what it does is uses 2 different time frames, which we've got up here, Aussie dollar and Japanese yen. I've got a 5-minute on the left, and I've got a 1 hour on the right. And I think what he's saying is, and he explains it in quite a bit of detail because he waits for a pullback. So the basic rule is, if you were to imagine, having a bias, that's it. Then the bias would be that this price needs to be clear of these 2 lines for this to be an upward bias, or vice versa. So like here, it's clear of these 2 lines, so it's a downward bias. And obviously if it's in anywhere in between, just don't worry about it. But this is a scalping strategy, so you've got to bear that in mind. And the way it works is, so let's imagine this is our upward bias, and this began at somewhere around 8 AM. So if we can just move over to this side, and we can go back to 8 AM, we'll just see how it works out. There's 5. I should have put lines on this before, save you all this bother. So this is our upward bias, according to that. I think it's probably nearer 9. Is it? No. Am I getting these times right? Yeah, I think so. Yeah. Oh, sorry, 5 AM. Oh. I need to get some glasses. Right, so this is only, for example, I'm not up at this time. This is the Asian session, so in the UK, we don't get up till 9 o'clock here. I don't even bother waiting for that. I don't even trade the London Open because it's just a bit crazy, really. Anyway, so this is the 5 AM. So this is where it all starts. And what this guy says you should do, and I probably might trade this a little bit on the different side. Should we just put a vertical line so we know what we're talking about? And we'll definitely change the colour of that. Damn you! Right, I am going to change the colour of this. I promise you I'm going to change the colour of this, which is the last thing I do. There you go, see? Right, so if I just make that a little bit drabber and darker. Right, so now we can see what we're talking about. So this is where this candle begins. So we can see we're well clear of this area. And so if that 5:35, this candle won't close till 6. So we need to look from 6 onwards. So we'll move this across to 6. So from here, we're looking for an entry. Now, clearly, that's been such a big surge, you do need to wait. And what you need to wait for is for this to touch this green average, which is an 8-period average. Basically, they're 8, 13, and 21. Then they're like really standard exponential averages. And then you're waiting. Once it touches that and can't close, as long as it doesn't close below any of these, we're good. If it closes below this one, obviously it's dead in the water. So at this point, if you could use a little bit of price action knowledge, you might be inclined to enter here. You would definitely be inclined to enter there with a shaved top candle. There's no wick here. Now this is a scalp trade, so there's 14 pips there. If you're not out by 10, you're not really scalping, are you? You know. But that said, where would you put your stop? If you're scalping, see, people say scalping. Now, scalping usually means that you're risking more than you're going to win, which is where it's always comfortable. Personally, I wouldn't be putting my stop way down here. I'd be putting my stop here. So let's just say there +2. What's that? So you're risking 13. So you probably aim for a 1-for-1. Now he does it with what he calls it works as a 3 times, because he would take 50% of his trade off a 1-for-1, put this to break even, and then he'd aim for the next stop, which would be 26 pips, which it doesn't quite make. So you would only get the 1 on that occasion. See, I'd rather get out with all my money out. Just right, I've done my scalp now. So since we're up in this, we're looking for that to happen again, for it to clear these bars, which is here. So this is a losing one for me. Now we're closing above again. Here's the touch, and it goes back in, and you'd have to put your stop down here. So you'd be looking for 20 back. You wouldn't get that actually, would you? You see, this is why brings me rather neatly back onto indicators, and why I don't use them. I don't use any indicators, the truth be known. My chart looks like, I'm going to show you what it looks like. This is what I actually trade with. I do these white so you can see it clear on the video, but mine looks like this. That's all I have. This line here is the monthly open price, which, if I'm honest, I'm not sure why I've got it there. I'm not sure. I'm looking at it. It'll be something else I remove, potentially. This line here is the weekly open price. It's just for reference, really. So last week, that's where it opened, and look where it closed, just about above it. If we look at the weekly candle, how does that pan out? Yeah, see, so it opened there, closed just about above it. So it turns out it's a nice big pin bar, so I suspect we'll be going up here, probably at least somewhere into this bit. There's potentially a couple hundred pips there if you were to buy it. But could you afford the risk down to here? A couple of hundred pips. See, that's what it's all about. Because when you put your trade in, you've got to put a stop in, haven't you? So let's go back to a colour you understand. While I was on though, indicator-wise, now quite a while ago, I was quite big into indicators, and I did make one. I did make one. Let's put that back on. That's Scalp. And I thought, well, I'll have a look at that, and I had a look back at it, and I thought, you know what? I reckon I could make money with this thing. So here we go. Let me see if I can put this chart up for you. Now, this I used to trade this. I have actually traded and made money with this, but I never managed to resolve a few issues with it, which I think I had a little tweak at it the other day, and and that's what it looks like now. Let me remove these grid lines, right, so we can see it better now. So if you look, this is obviously like any indicator. It's quite laggy, but if you see this here, this is where the indicator is in. Let's see what. Let's go back quite a way, shall we? Should we just go back lots of days and just see how? Let's go back to where it starts, and we'll give an honest appraisal of this, shall we? Because this is an indicator. Now, indicators are laggy. Right, now, this indicator is telling me to sell here. Now, obviously, that is the mother of all risks. No, I don't know if that's because that's when it started. So, I'm going to ignore that one, and then we're going to go brutally honest from now on. So, if I was to open a trade at this point here, just because this will alert to your phone and all sorts now. It's been developed over a period of time. Not that long, but it's gone for quite a while. Anyway, so this arrow comes on. This doesn't repaint or anything, and it will say, bling, blah blah blah. Time to trade, buy trade, and obviously that will be the entry there, and where the stop would need to be here on where this arrow is. Even at the bottom of the arrow, if you like. So there's a 50 pip stop needed for this trade. And so we'd look for, well, a 2-to-1 would be nice, but I think that's just pushing it there. So if you want to get out quick, you could get out in a 1-to-1. But other than that, this stays in. And it's just fortunate. It's just by chance it catches this big trend. It's not magical. It's not, it just, if you can hold on to your nerve until this is goes red, you'll be coming out there at 250 pips. That's over a 1, 2, 3, 4, 5 week period, I think. Or you could just come out whenever you like at somewhere up here. Now, for a 50 pip risk, that's quite nice, actually, isn't it? It's actually an 8 to 1 if it gets to for 4. If you were to come out there, so if you went for a 5 to 1, you know, unless it tells you to get out beforehand, obviously if it hits your stop, you're out anyway. But you could potentially go for a 5 to 1 on that, and then you'd only have to win the next trade in 6, wouldn't you? So this is where it comes down here, and it says to sell. That's way out my comfort zone, that is, an 80 pip stop. But it puts 50 pips on the table, and then a 30 pips, and it's sort of telling you, if you understand price action at all, you'd be pretty clear that this is creating higher lows. Therefore, we're going back over here. This is getting closer to this lines as well. So the chances are you're going to get stopped out, so you might as well just get out. There's no point hanging around waiting for yourself to be murdered by the stock markets, because let's face it, they'll create as much pain as possible, as often as possible. That's just how it is. That's how the markets work. And it's the same here. You've got to buy here. Honestly, I probably wouldn't touch that because of this. I'd be thinking it's going for a double top. I'd actually be thinking that. Tell you what we can do. We can step through it, can't we? So if we press F12, it'll move a longer candle at a time, see? So it's like rapid animation. See, this is starting to get lower now, isn't it? Now, you'd think that's going to go up again, given that candle. Boom. Right, this trade's dead in the water now. So we're now looking... Do we go the opposite direction? Well, let's have a look. That's a sell signal. Watch the stop. 80 pips. We're at recent support here. There's a fair rejection from that area. I think you've just got to go for it. I think that's the trouble with indicators. If you can filter out these bad trades... I mean, that actually gives you some money at one point. I mean, you could have like a lock-in break-even at 50 pips or something, I suppose, and then you don't lose this particular one. You know, use like a trade manager or something, or trading stop, not trading stop manager, trade manager, which will put you at break-even at 50 pips or something. So then we've got to buy. And actually, if you'd have bought that, given the state of that candle there with that wick on it, you've got to be crazy to stop in there. See, that's 35 pips twice before it's going to take you out. And the stop on that particular trade was humongous at 95 pips. So that's the trouble with this indicator. I mean, if you can get, I suppose really I ought to backtest this properly, the manual backtest, and try and figure out a place to put the stop loss and do, you know, proper trading powered style, get the spreadsheet out. I've done that a couple of times, long before I'd met trading powered or empowered trading. Anyway, shout out to Jason Greystone. All right, mate, how's the drone? Jason Greystone, remember the drone. So he's there. Speaking of shout outs, my old mate Simpleton's appeared. He had a bit of a spell offline for a bit, but he's appeared again. I'm glad to see he's still around. I must give him a call. Matey, we haven't spoke for ages. I'll give you a call, I promise, when I get 10 minutes spare. Because when he and I get talking about trading, we can talk about it for far too long. But we have fun doing it. All right, so that's interesting, an interesting indicator. But this is why we don't use them, because this is telling me to trade a long time after. Actually, it's bounced off here. So you think to yourself, well, you know, what do I do? But going back to this scalp system, what I've done is I'll drop a link for the video in there. This is the fella we're talking about from Forex Signals TV. And you'll see in here, we'll just flick through. So you get the general idea. But he explains it really well. And what I'm going to do to help you out is I'm going to drop the template and all the indicators on that particular template. I've dropped them in here, see. So hopefully you know where to put them. And obviously the indicators go into your MQL for indicators. And the templates go into templates. See, so and that's the indicator I got on was the high-low, the magnified price, because you will see a reaction at the high and low of yesterday's magnified price and the scalp. And if you open a 5-minute chart or a 1-hour chart, it'll display them. Any other chart, it doesn't. I'll demonstrate that actually. So if this is the 5-minute scalp, let's open another one, chart window, and we'll put the scalp on. So if this is the 1 hour, if you put it on 4 hour, it takes the moving averages away because they're meant for 5 minutes and 1 hour. See, so it just doesn't display them anywhere else. That should hopefully avoid a bit of confusion as well. So you're not, whatever. I don't know. Anyway, that's that. So let's just change this tile then vertically so we can see. So basically, you're looking at your 1 hour chart for bias, and then you're looking at these for direction. Yeah, got a little bit of a trade here after this candle. You've got to be looking at trading that actually just at the end of the day. Quick 5 pips maybe, less the spread. This particular broker's got a massive spread, look, 50, which is 5 pips. But I've got this up here as well. So on the if you're trading a long term, for example, overnight, then this is what the swap charges are. So you lose money on that one, and you can make money if you're in a long term buy. If that was like a couple of weeks, you'd be making a few pound every day, or a few pence, or whatever, just to help the job out. All right, okay. So have a read through the description at the below. Do click on the more button. I've had loads of people write to me and say, "You haven't. Where do you get the stuff from?" Well, if you're still on the video now, just look down in the description and it's there. All right, just scroll down in the info. Meanwhile, I've got to go and I think I'm gonna have to cut the grass today. It's not really been raining much, but we have watered the lawn, so it's grown a bit. And I don't know what to do about that indicator. I don't know whether to spend some time on that. I might trade it on a demo and then I'll update you in a couple of weeks' time, see how it's going. In fact, that's what I'm going to do. I'm going to run it on the 4 hour on a demo, and I'm going to take the trades based on a little bit of price action, but mostly because that indicator says so. Let's see if we can make some money with that, and then if we can, well, who knows? We might get rid of it. We might sell it. We might share it. I don't know, really. If anybody thinks of a way to filter the trades, let me know. But let me tell you, RSI and all that doesn't work because I've tried all the obvious stuff. The only way I can filter the trades is by price action, or make it so the risk-reward ratios outpay the losing trades. That's got to be the best way, isn't it? It's all about that, isn't it, really? It's all about winning more than you're losing. That's what I'd like to say. Right then, all you folks, get yourselves outside and have a bit of fun. It's a sunny day today and I'm going out myself. All right, have a good time. Oh, my banana and mustard sandwiches have arrived. You know what that means, don't you? Time for lunch.